Jeff, I know you have a $100 call. When can we reach that point?
Right now, the upside risk in this market is exceptionally high. One of the reasons why, as alluded to, the markets are incredibly tight from a physical perspective. Whether you see it on the refining margins or in crude oil itself, the entire complex is extraordinarily tight, reflected in that super backwardation. Obviously, what it means is that this market is incredibly vulnerable to any type of supply or demand disruption, very much like what we saw in European gas and power. Let's say late last year. So oil has now teed itself up, to look very similar to what European gas and power looks like. That was what we highlighted this risk back in October of last year. We're at that point right now. And so the question is, can you come up with any supply or reduction in demand as you move into the spring to be able to ease the situation?
All right, let's get to Fiona, and then I want a bit of a timeline from you, Jeff, about when we could see this happening. Fiona, what are you expecting in terms of prices by year end and from now and then?
I think, as Jeff said, we're really in a very tight situation. We talk about being at tank bottoms, so we just don't have that leverage if something goes wrong. So if we see, continuing situation, I would expect, prices to remain, around where they are, but there is definitely the risk to the upside, and it's not insignificant.
So, Jeff, talk to me about, I don't know whether we can talk about sequencing in the price of oil, but once it touches 100, are you expecting it in the next couple of months? And then what happens? Is it a trend of higher, or could it readjust?
Well, it's difficult to say, in terms of what kind of, demand is far stronger than I think what anybody thought, because the Omicron impact is not as significant as even we embedded in our models. And then we look at the supply situation, the continued underinvestment in supply leaves this market incredibly vulnerable. Now, the question is, what is the upside limit here? One thing I like to keep in mind is if we think about the amount of liquidity in the system today, and we look at oil versus liquidity, the run-up we see in Canada, you don't even see it on a picture because the liquidity so overwhelms the movement in oil and commodity prices. And a lot of people go, okay, look at oil as a share of GDP. Let's think about it in terms of liquidity, because that really determines on the ability of the system to be able to deal with these price increases, particularly when some of that liquidity is going to the lower income groups.
So, Fiona, this is the chart that we were talking about, and it shows exactly what Jeff is mentioning, right, which is Brent showing this unusually strong backwardation. And actually, if you bring it back, there are only 11 trading days since 2008 with an equal or stronger, second to third time spread. So how tight is this? Is there, have we seen any signs of demand destruction yet as prices soar, actually?
Well, if we look at the European power market, we've certainly started to see, signs of demand destruction. The same here in the UK, with some falling off of sort of manufacturing demand for things like natural gas. And I would expect that we may be getting close to that point in the oil market where we do see some demand destruction. But for now, again, as Jeff said, demand's incredibly tight. I've been amazed, particularly in the US, with the distillate demand, really illustrating just how strong the manufacturing and the transport sectors are.